Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we begin the week this Monday morning, we did see some positivity which was carried on from last week's recovery on both the indices Sensex and Nifty. And as I speak to you, Sensex is trading at about 53,370, up approximately 640 points. Nifty is trading at close to 15,900, up almost about 200 points. Nifty Bank trading at 33,946, up approximately 220 odd points. And the rupee dollar equation with some weakness now turning into strength as far as the INR Indian rupee is concerned. So dollar is somewhere close to about 78.28. 78.30 is where the rupee dollar equation is, with slight bit of strength in the INR. On the energy basket, after a substantial amount of correction, we are seeing some amount of uptick. Brent is trading at $114 a barrel, close to $114 a barrel, and NYMEX is trading close to about $108 a barrel. So that's a little bit of breather for us. And not to forget, there have been a lot of efforts to bring in the Iranian oil and gas into the world commodity market to cool off the supply side issues because of the geopolitical situation between Russia and Ukraine. Let's hope. It's very important to see where the markets end today and this week, and our sense is that if we are able to take off 16,000 on the Nifty spot decisively and stay above those levels on closing basis, then there could be a little bit of more legroom on the upside. But we will also have the earnings season unfolding coming July 10th or 15th of July, somewhere is where the earnings for the first quarter of this financial year is likely to kick off. And there has been a mixed reaction or expectation, if I may, on the earnings front. Some pocket of the market feels that because of high crude prices, the manufacturing side could be a little bit tagged below than the expectation, whereas services side could see a little bit of improvement. So services side, as I mentioned earlier, IT, banking, NBFCs, life insurance companies, telecom, they are likely to do a little bit better. And telecom has a tailwind of the 5G spectrum auction as well. So this could be the positivity side or sectors which may have a little bit of lower impact in terms of rising crude oil prices. But manufacturing side, there could be mixed expectation, with some sectors performing a little bit lower than what the market would expect. For example, cement and metal could be the one which would take the hit on the chin. FMCG would be the one which would possibly escape through with demand recovery. There is expectation that a good monsoon will spell opportunities for FMCG companies in the semi-urban and rural India. Having said that, one important announcement was made just some time back. There is a GST Council meet happening tomorrow, that is 28th and 29th. So by the end of the GST Council meet, it will be prudent to look into what are the changes that have been brought in by the GST Council, the recommendations, whether there has been any slab change for certain goods and services, or whether there is going to be some amount of positivity in terms of cut in GST slab rates. So that needs to be wait and watch. But the sense is that the recovery that we've seen from last week has been able to take off certain crucial levels. There were a lot of eyes on the levels of Nifty, somewhere close to about 15,500, 15,600. But we have taken off those levels decisively, and we are trading with a strong positive bias. And most importantly, I think the momentum that we saw in the morning has been maintained throughout. Even as I speak to you this Monday afternoon, there has been a good amount of strength all across. Barring one or two stocks and sectors, I think there has been contribution coming in from all across sectors, whether it is large cap, mid cap, small cap. There has been a little bit of positivity in terms of buying activity. FI sell side numbers have kind of gradually scaled down, but a little bit too early. One needs to be a little bit patient in terms of where these numbers go and stand, and when does the selling from FIs abate. But domestic institutions have been quite active, and they've been on the positive side, at the buy side. That's why we've seen the markets also hold out quite decisively. Given the earnings outlook and of course where we are, I think my advice would be like it was earlier. No need to rush into the market thinking that you missed the bus. There will be opportunities when we have a little bit of correction coming through in the market. Once this recovery starts getting slower and the space is coming down, I think there will be days of profit booking. And of course, my understanding is that if we take off 16,000 decisively on the Nifty spot, then possibly there will be elevated levels to watch out for. On the pandemic front, there has been a little bit of negative news in the city of Mumbai and Maharashtra. The cases are rising quite rapidly. That's one concern that we'll have. And of course, not to forget the huge political crisis in Maharashtra, which has been a little bit of potboiler for the ruling alliance, that is the Mahavikas Aghadi MVA, with rebel MLAs and MPs holding their ground in Guwahati with the fraction which has parted ways. One remains to be just wait and watch on this front as well, because next week, I think this week especially, is going to be very, very crucial in terms of decider which way the pendulum swings in terms of who remains where and who doesn't remain in terms of the power. So little bit of cautious approach with the market on fallback of the Maharashtra political crisis, but I don't think that that's going to be a major serious impact. We will overcome this situation as well, like we have overcome the rest. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye bye. Cover your face, wear mask, and be safe. Thank you very much.